Ottawa says it will defer its planned changes to the capital gains inclusion rate until January 1st, 2026. Joining us now with more is Nicole Ewing, principal of the Wealth Planning Office at TD Wealth. Nicole, great to have you on this really breaking news today. Lay out for us what we've actually learned today.
So today, the Minister of Finance announced that the previously announced proposals to increase the inclusion rate on capital gains has been deferred. So the previously announced date was June 25th, 2024, which would have meant any gains realized after that date would have been subject to the new rules. That the June 25th date has now been extended to January 1st, 2026. What that essentially means is that the status quo remains. The CRA has been administering the proposed legislation, meaning it has been collecting tax at that higher inclusion rate for individuals over 250,000 of gains and for corporations and most trusts. The CRA has been administering that inclusion rate as of June 25th. With this announcement, it would indicate that that would probably not be happening going forward, as the proposed gain, the proposed increase is not going to be effective until January 2026.
Right, so very interesting developments on that file. Were there any other measures that we were looking at that perhaps were included or not included in today's announcement?
Yeah, so interestingly, in the same previous tax proposals, there was an increase to the lifetime capital gains exemption amount, which in 2024 was 1 million, just over $1 million. And the proposal was to increase that to 1.25 million, effective on that same June 25 date, and that date has not changed. So assuming that legislation is introduced in the future and it is passed through government and that becomes law, the increase to the lifetime capital gains inclusion rate would be effective as of the June 2024 date, whereas the increase to the inclusion rate for capital gains for individuals, corporations, and trusts is going to have that later date. As well, the new Canadian Entrepreneurs Incentive that was previously discussed, it is also proposed to have that earlier date. So interesting that there was a distinction made between the inclusion rate increases and the lifetime capital gains exemption amount, which would benefit individual taxpayers.
I want to go back to the deferral till January of next year of the changes to the inclusion rate for capital gains. Obviously, and the minister made note of this in the release, that this happens as we get closer and closer to tax season. You mentioned, of course, that the CRA had been collecting. Do we have any clarity? Do we know going forward, or should people really be speaking to an expert if they have questions around these issues?
This really would be where you need to speak to your tax filer, your tax advisor. If you are one of these corporations, for example, who had a filing deadline already and has filed based on the proposed rules, as was the recommendation by CRA, you will likely now be in a position where you need to figure out how to get that amount back into your hands, and that's where your tax advisor would be helping you with that. Now, again, anything that was sold pre-June 25th to realize gains before that increased inclusion amount date, those are realized gains and they would still be included in your taxes, but they'll be included when you're filing at that lower rate. This really is a place where expert advice should be sought if you're one of the people that would have been impacted by either the proposed rules or now the walking back of those proposed rules.